At $1.3 million buyers, last opportunity now, once, twice, third, final call. Happy to pass the property in if there's no further bidding at this stage.
Buyers are back in the property market this spring, but they're holding back.
The auctions are sort of going above what they sort of say they are, or the range that it's in, which makes it difficult for us to budget.
So we are looking to upsize for our family, so yeah, it will be quite a significant mortgage now.
It's going to be open slather to all buyers.
Agents say buyers are most concerned about interest rates.
Not knowing whether rates are going up, whether they're going down, what's happening in the US, what's happening globally, and so it's just been that hesitancy.
Nationally, home prices rose 0.4% in September and 6.7% over the year. Perth led the monthly gains, followed by Adelaide, Brisbane, the region, Sydney and Darwin, while values in Melbourne, Canberra and Hobart went backwards.
Properties aren't selling as quickly even at the national level, and we're getting a little bit of a rise in total stock now as well.
Housing experts say interest rate cuts this year or early next year would help buyers, but growth in prices will still be limited.
Because of affordability constraints and reduced borrowing capacity, we're essentially seeing the buyer pool is getting a little bit smaller. This means that there aren't as many buyers for the amount of stock that's on the market, and for the buyers that are there, they might find they have a little bit more negotiating power in the transaction.
To improve affordability, Treasury is looking at options to abolish or limit negative gearing and the capital gains tax discount for property investors.
It would take some heat out of the market, given investors make up a relatively high portion of finance at the moment, accounting for about 38% of housing finance. We also see that a lot of investors utilise negative gearing strategies, so it may lead to some sell-off in investment properties, which would also bring prices down.
Negative gearing allows investors to deduct losses like interest payments from their taxable income when they exceed what they get back from renting the property out. Grattan Institute modelling suggests house prices would fall about 2% if negative gearing was limited to new homes and the capital gains tax discount was halved.
Tax breaks can be a factor that pushes up demand for housing and thereby increases prices, but economists say the other part of making homes more affordable is increasing the supply of new homes.
Whereas these tax concessions have 1 to 4% effect on house prices, the effect of zoning and housing supply is enormous. Estimates put it at 30, 40, 50%.
Planning reforms, I think, would be much more beneficial and fruitful in terms of boosting supply.
ANU Associate Professor Ben Phillips says capital gains could also be taxed in line with inflation like it was before 1999.
The combination of negative gearing and reasonably favourable treatment of capital gains for investors certainly helps investors and probably does have some positive impact on house prices,
which continue to rise while Labor works out whether to take a policy of curbing property tax breaks to the next election.